All right, guys, let's get into it. Stock market technical analysis. We're looking at the charts telling us where the probable profitable trade ideas lie in the future. So let's get into it. We've got CPI reading coming out tomorrow, so that's going to move the markets very likely. Again, the CPI is all about inflation. What's the Fed going to do? And that's really what the market trades on. What's the Fed going to do? So that's kind of where we're at now. CPI comes out tomorrow. I believe it's before the market opens. So likely we're going to have a big spike up in the morning or a big spike down. So we'll go ahead and look at what the charts are telling us right now. Couple, triple Qs here. A couple developments. The biggest development is just the PPO right now. You can see it's just about ready to cross over right there on the daily chart. Not fully crossed yet. It's just right there. So any more downside, a gap down or something like that would likely is going to seal the deal for that bearish PPO crossover and give us that confirmed negative divergence, which should usher in the next leg lower in the market. That's the way I'm leaning right now. And so we'll go ahead and just see how that plays out. As I kind of scan back on triple Qs, you look at the last time you had the bearish PPO crossover, it was right there. And that was followed by, that was really followed by this selling right in here. We dropped from that crossover down to the lows about 7.5% or so in triple Qs. And then as you kind of roll out, here was another bearish PPO crossover on the daily. That was followed by, the crossover came right there. So you did have the spike up there, but ultimately you did get about 11% drop after that crossover came shortly after. We had another bearish PPO crossover right there. And then again, that was a leg down in the bear market, 22%. And then obviously there's another one, which is, another big drop. So again, what you look for is kind of those moves up, and then you look for the crossover with the negative divergence. The last time we had negative divergence on the chart, really, we had a little negative divergence right there. Okay, so when this spiked up right there, that was a divergent high. We shorted that one, and obviously that was faded. We now have the negative divergence now and about to get the crossover. And then as I roll out and look at the last time we really had it, it really wasn't until we started the bear market right back here that we had the negative divergence already in place. And then you had a bearish PPO crossover. You really got it right about there, and another one right there, and then ultimately that kind of started that started the bear market. So to me, the setup that we have right now looks similar to what we had kind of right here, and it looks like we're right in this point where we're about to start to drop. So we'll see how that plays out. The other thing I want to look at, a development that happened today, Apple. We got the bearish PPO crossover there, so you see that. Let me zoom in on the PPO. See, there's your bearish crossover. So that's confirmed negative divergence now in Apple. Doesn't mean that they can't spike this thing up on the CPI reading tomorrow, but I suspect if it spikes up tomorrow, it's going to get sold into, and likely that's going to be the end of the move. So the upside is limited, regardless of whether they try to spike it in the morning. I think the upside's limited. I'm really thinking that this is going to break down, okay? So what I'd be looking for tomorrow, we've got this trend line right here on the daily in Apple. I'd be looking for some sort of a gap down and a break of this trend and a sell signal. We've just got the confirmed PPO, so now you need to break that trend. You see the break in trend, and that's going to set this thing up to start to move lower, and triple Qs should move lower with it. So that's what I got on that one. Microsoft. And then real quick on Apple, again, in case it spikes up, you've got this trend, you've got the big resistance right here. This is the start of the bear market. So you can see resistance, 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 and we overshot it briefly, but ultimately that's been sold into since we hit that resistance. I know a few days ago, everybody was saying, how can you be bearish? Everything's bullish, it's going up. But the reality is that Apple, since we hit that resistance, has sold down about 2.5%. All right, so there's been nothing but selling since we hit resistance. And again, that's why I don't just jump on trades and get emotional and just jump into something because it's going up, thinking it's always going to go up. No, I trade as we hit key levels, especially big resistance is often the best entry point for a short. So if we gap down tomorrow, and that's a big if, because again, at the end of the day, I don't know where it's going to go. The chart tells me there's a good probability it gaps down. But let's say we gap down tomorrow, then you can go back and watch my video from 4 or 5 days ago, and you'll note, and at that moment, this will have been the best entry for a short position. And all the comments of everybody extremely bullish, it's just, they'll know at that point that that they're kind of holding the bag basically, and that's just how it works. So usually the best entry for shorting is not after we start crashing. Of course, that's when everyone wants to chase and start shorting, and now everyone gets bearish after you start moving lower. But as you move into resistance after a long extended uptrend is usually the best entry point for a short. Not after you gap down and it's obvious to all. Okay, so that's it on Apple. Bearish PPO crossover is the next development. Microsoft, let's see if we got it. I know it was really close. On the PPO, you can see here, we pretty much got it. It's crossed right now, just barely. You can see there, it's just barely crossed. The PPO is just barely crossed over. So it's so close, I can't say that it's a complete crossover, but it's definitely looking that way, looking like we're going to confirm. Microsoft over the last few days has really just treaded water. I mean, it's basically gone nowhere. We're just kind of going sideways right here. So again, you break down, you're going to get the bearish PPO crossover, and it's going to set Microsoft up for that move lower. So that's what I'm anticipating. Again, big resistance at Microsoft is right there, about 282.58. And you can see we popped it, but really all we've been doing is just diverging. This spiking up and selling down, and just new highs in price are not new highs in momentum. It's negative divergence. So to me, this is the price action you look for when there's distribution. Institutions, to me, it looks like institutions are unloading their positions. And, that's what I see. So we'll see. Google, no bearish PPO crossover on that one quite yet. Amazon, let me zoom in on this one. You'll see here on Amazon, very, very close, but not confirmed yet. So right there, just a little bit more downside, and we'll get that. So if we see some downside tomorrow, then we're going to have confirmed bearish negative divergences, in really the big ones that matter: Microsoft, Apple, Amazon, maybe even Google. But the big FANG stocks will all have, confirmed bearish negative divergence, and should usher in a lot more selling. Okay, flip over to commodities. The two commodities I've really been interested in is Joe and wheat. Joe's obviously doing what we want it to do. Again, I highlighted those support zones right there. Support, bullish divergence. All right, coming off a nice bullish divergence on the daily chart. And, basically pretty strong rally since it made that divergent low right there. I mean, the thing's up 11% or so in about a week and a half. So still looks good for more upside. In fact, I think we're going to take out these most recent highs and continue upward. All right, so again, just like I'm not interested in buying it right here. I mean, yeah, you can buy on pullbacks, but ultimately I want to buy at support right there. I don't want to buy it when it's up 11%. I want to buy it before it goes up 11%. So that's that one. And, we've got some resistance. This is a former resistance level, so I'm likely going to hold as some sort of resistance up here, about 58.70. Maybe you get a pullback around there, but still looks good for more upside. Wheat, not really doing anything. It's just it just hasn't really gained momentum yet, but still has that nice bullish divergence on the daily chart. It's just, continues to look like it's accumulation, just consolidating basically. So we kind of spike down, make a divergent low, rally, come down, maybe put in a divergent low, rally. So it still looks like a basing pattern. It's not going up, but it's not really going down in the bigger picture. So still sticking with that one right now. I like it as a long. Let's look at the semiconductors. Again, semis got the bearish PPO crossover. They got it a couple days ago right there. So we've got confirmed negative divergence, and we've got a trend line to watch. All right, you've got support. They held it right there. So again, break of that support level sets this thing in motion for a decent amount of downside, which I think is coming, maybe even as early as tomorrow. Nvidia, again, broke support. There's your bearish rising wedge. Negative divergence with the bearish PPO crossover. Gap down, so that's a sell signal because you gap down, all right? Boom, gap down. And then the last 3 days, they've just kind of been grinding it higher, but just grinding higher. It's not really moving impulsively higher. I mean, obviously yesterday it was up, but from the sell signal, it's up about 1% as of today. So, and obviously yesterday was a strong day, but it's followed by selling. So again, I think we're going to, start to set up for the downside on this one. You just need to see the broad market start to roll over, and especially tech. Once that happens, and it looks like we're right on the edge of that, then this thing will start to roll over as well. A lot of downside here. Again, I can easily see this target, 208, and probably a lot lower. AVGO, this is another one that I'm short. Again, I shorted it right there at the back test of resistance. Okay, you had a bearish rising wedge. You had negative divergence. All right, you had a breakdown in the sell signal, and I shorted it right there as it ran into resistance. And from there, the trade's actually profitable. I mean, we hit that resistance level back in early March. So, over a month of trading, and they've gone nowhere. All right. This is a month of trading, and ultimately they've gone nowhere. And that's what I talk about when I say the upside is limited. When I put out a video saying, okay, I think, guys, this is the top, or the upside is limited, things like that, I'm not saying that because I put out a video that the upside is limited, or I believe we're at or near the top, that tomorrow or even next week we crash 20% to the downside. That's not what I'm talking about. What I'm talking about is I want to take a position short when there's limited upside, because I believe over time we'll start to trend lower. All right. Typically, when you start to move lower, you work your way lower. Few people believe that there's still the buy the dip crowd, and not a lot of people have caught on. And the lower you go, the more and more people get underwater and start to panic, and then ultimately people throw in the towel and capitulate, and you see a big strong flush down to the downside. All right, that kind of comes near the end, not usually in the big beginning. So if we do this and kind of work our way lower, and then ultimately kind of flush towards the end, that means that I want to be positioned short right here at or near the top. And that's what I talk about. We've gone virtually nowhere in this thing for a month, and my trade is actually profitable by about 2% right now, even though the rest of the market felt so bullish. This thing's gone nowhere for a month, and ultimately it's profitable. The short trade's profitable as of right now. So we'll see how tomorrow plays out. Starbucks, this one, yeah, I still like it short. They kind of popped this little level that I had today, so we'll see how tomorrow plays out. Everything's going to depend on the CPI. It's very likely whatever way the market reacts based on the CPI, most of the stocks are going to do that same thing. So if we sell down, this is going to sell down with it. It's all right. So that's what I'm anticipating. We have a negative divergence again. Your divergence was right in here on the daily chart. Bearish rising wedge, broke trend, and we're actually trending lower. You can see it. So I think we're going to head lower now and continue this downtrend. Gold. So I don't have a position. I'm not short gold. Some of my longer term positions I own, I do have some gold miners in those that I'm not exactly trading. So even though when gold goes up, I do gain there, but not trading that stuff. Gold, you can see on the PPO on the daily chart, it looks to me like we made a new high here and kind of burned through that divergence, something like that. All right, so, and we did it on the RSI as well, so still holding this bullish trend. So gold looks bullish to me if I had to pick. We'll have to just continue to watch this one. Obviously, here's silver making a new high. It's kind of an equal high, so still potential divergence on that. So what I'd like to do is just kind of keep an eye on it, see how it reacts. If we get some pullbacks, maybe we can buy the dip. But again, want to buy at support, not after this thing's ran. It's run up pretty hard. So maybe a pullback. I don't know. Mixed feelings on gold. And bonds, you know, this is our 10-year rate, interest rates, and really since they bottomed back at COVID lows right here, we've been trending higher on the daily chart. You can see support, there's the lows, COVID lows, support, and recently bounced off that again. So those look, you know, interest rates look like they're going to continue to rise, and as they rise, they should put pressure on the market and especially the growth stocks. Okay, so that's really all I have. We'll see how the CPI and it's not so much really what happens in the pre-market. Obviously, the market's going to move one way or the other. But what happens when the market opens at 9:30? You know, let's say we gap up tomorrow, do they sell into that and we see strong, you know, a strong reversal or something like that? It's more important what the market does, and especially with the major institutions, the big players in the market. What do they do, you know, when the bell rings at 9:30 Eastern time? And that's going to be important to really understand. So I'm going to drop the video out. You guys let me know how I'm doing. Check out my technical analysis course. Join the private member group. Both are in the links in the description of this video. So check those out if you're interested. And I will catch you guys on the next one. Later.